Now, the first tip, as Peter had referred to, is the government co-contribution. Now, it has been scaled back over the last couple of years from, if you put $1,000 into your super fund, then the government would match it with $1,500. Then it was reduced from a $1,500 co-contribution to $1,000, and now it's sitting at $500. So it's not as generous as it was before, but it is still well worthwhile doing, because if you do it year on year and you're eligible for it, then it's definitely well worthwhile doing. So if you put in $1,000 into your super fund, now this is what they call non-concessional contributions. So you just need to be aware that it's not salary sacrifice, it's not foregoing your income to put the money into superannuation. It's money that you have in your bank account that you put into your super fund as a personal or member contribution. They call it a non-concessional contribution officially, and it doesn't attract any contributions tax going into the fund. But then if you satisfy the criteria, then the government will boost your super account by $500. So what are the criteria? The first one is that your total income needs to be less than $46,920. It was previously $61,920, so it's gone down this financial year. The other rule is that your total income needs to be, or more than 10% of it needs to be derived from employment, running a business, or a combination of both. So you can't just be generating investment income and take advantage of the government co-contribution. You need to be actually earning some money, at least 10% of your money coming from employment, running a business, or a combination of both. You need to be less than 71 years of age, and you can't hold a temporary resident visa at the time. And one important point is that you need to lodge your tax return, your income tax return. Now, there was an interesting question that Shirley had, which was, can I claim the super co-contribution if my income is less than $2,000 and I will only be lodging a non-lodgement return? Now, I would suggest that if 10% of your total income is coming from employment purposes, so if that's your total income, $2,000, and if you were employed, your employer made some superannuation guarantee contributions, then you would need to submit your tax return, not a non-lodgement return, to actually get the government co-contribution. But you can simply do that. Got a very simple return, then it's a very simple process to do that either electronically or simply on a paper-based form. So that shouldn't be too difficult for you. But the key thing is that the 10% rule that you need to satisfy there, Shirley. So hopefully that answers your question about the government co-contribution. If you're self-employed and that was $2,000 and that's all the funds that you earned, or all the income that you earned for that financial year, then you would be likely to satisfy the requirement. Peter's asking, if income is from an investment property but not a registered business, would this qualify? No, it needs to be from not investment income, but from running an actual business. So it can't be from an investment property to qualify for that, Peter. Thanks for the question. So the first tip, end of financial year tip, is that government co-contribution. The other thing is, if your income is less than $31,000, well, it's $31,920, you put $1,000 in, the government will give you $500. If you earn between $31,920 and $46,920, then you're not going to get the full $500, and therefore you don't need to put in the $1,000. Now, I've got a calculator on my website that can work out the exact right amount for you to contribute to get the maximum co-contribution without putting too much into the fund, or more than you need to into the fund. I'll just have a quick look at that to show you how that works. This is the calculator, so the address is just cornerstonewealth.com.au/government co-contribution, and then it'll take you to the calculator. So if your income was $40,000, for example, and your income, just note what income includes. It includes your assessable income plus reportable fringe benefits, reportable employer superannuation, so there are any salary sacrifice contributions, any business deductions, and net investment losses. So if you're negatively gearing, then they'll be added back before your total income is calculated. So if your total income, based on this description here, is $40,000, then the optimal amount for you to put in is $462, and the government will then match it with a $231 co-contribution. Now, you can still put in $1,000, but the government still is only going to give you $231. David has just asked the question, what about fringe benefits as a minister of religion? Does that add to the total income? Good question. Fringe benefits do add to it, but exempt benefits don't. So where you've got an exempt benefit account, it sort of stands separate to this, but fringe benefits do. So it's that's how I differentiate the different types of benefit from a minister's perspective. So if you're in the medical industry, you're a nurse or earning income through a hospital, for example, and can get the $9,000 of fringe benefits, they're included within this total income test. But if you're a minister of religion and you take half of your remuneration as exempt benefits, those benefits aren't included in the total income test.